Good morning. Welcome to Options Tender. It is Wednesday after the presidential election, and what a gap up, not only on the market, the small caps, and I have something really cool to show you in the small caps when we get there. So make sure you stick around. The Qs, Tesla, amazing gap up. So luckily we were in that as a hedge, and now we're back to full strength shorts. Okay, so with that said, we're doing this video 10:48 a.m. Eastern Standard Time. If you're interested in getting these videos intraday, consider becoming a member, a YouTube member for 99 cents. Okay, so a lot to show you here. We will talk about the bullish stance that we're in, new all-time highs, how the Q's count changes, and what to do from here. So am I still bearish? That's the big question, right? Absolutely. So when I said presidential election pop and FOMC drop, I meant it, but I did not know that we'd get a new all-time high there. I was looking for another move up as per yesterday's video. So, okay, let's dive into it. We have SPY in the monthly time frame, 2000 top, 21 top, forming a top here. On the monthly, we are in uncharted territory, right? So we're making new all-time highs, and with the new highs in the Qs, all we're doing right now is diverging. We have a monthly divergence. We made a new divergence in the RSI right here, which we didn't have that in the near term, but we formed that now. So that's one thing that has changed. Other than that, we're above the 8 EMA. You can't really, confirm that this is some sort of bear market or anything until we start to break down from at least the 8 and then the 20. We're not at that yet, but I think we're turning imminently. I think the FOMC is the next catalyst. So let's go over to the weekly. On the weekly time frame, just bouncing off the top of this channel here, going for it again. Do we have a few more points to go? Perhaps. Do we go to 6,000? I mean, that's what people are calling. I don't know. 600 on SPY. I don't know about that, but we formed another divergence on the monthly. Look at that. Another divergence on the weekly. A lower high. Again, a lower high. Sell signal on the slow stoke. It's happening, you guys. I know that it's hard to tell. How can you short this? We went back to the 8 EMA, held on to it, got the new high from the presidential election catalyst. I'm not going to show the other boards. No new information there. We'll go to the Qs on the weekly time frame so you can see what I was talking about. After this move here, we held on to the wedge again, the wedge forming from this point and just moving up off of the but the trend line from 2000 and then 21. So held that. Let's extend that out a little bit more. And now with this new move up here, getting for the first time just now, I guess that's what needed to happen. Did not think that would be a new all-time high. I get it. We got negative divergence right there from what I thought would be the all-time high. In the top, we just reached the top here with negative divergence. Same thing with the RSI. Here and here. Sell signal. Slow stoke. Feels so bullish, but you got a lot. We have a lot of work to do on the downside, but wow, look at all this green candle, green candle, green candle. Let's go to the IWM. I'll show you right now on the weekly time frame. So first of all, in traditional technical analysis, this is our wedge that we're forming here. We talked about this for a long time, and I stopped talking about it because I wasn't sure if it'd go any higher at this point. Do you see that little red mark? That's where I thought the high would be. Okay, that was our target way back when. We never reached it. We just now hit it. Okay, we're at resistance. Let me show you. This is what the board that we were using, and we changed our count to fit this high here. But now that we have our final high here for this, makes much more sense. That's what I said in the other videos, is with the IWM, with our all-time high being back here, and we're looking for a large correction. We're looking for this move here to be an A, a larger degree A, and then this to be an A, expanded flat, B, 1, 2, and we had the 3 right here. This is an ending diagonal right here. The wave 4, big wave 4, crossed over wave 1, typical on the ending diagonal, and then an A, B, C for wave 5. Now, in a flat pattern, which this is what we've been looking for, is a large move down now for wave C in the red. It's very typical for a flat pattern to reach the 887 retracement, and that's from high to low. The retracement to 887, and now we're looking for 100% move off of there. And it can extend beyond if it needs to, but 100% move would be our conservative look at the 153. Okay, so that's where our wave C, I don't know what kind of time frame, but that's where our wave C will be targeting from this point, from this high. All right, now if price gets on top of this 887, 235, gets on top of there and continues to move higher, you have the 100% right up here. That's 244. All right, then maybe we can get all-time highs, just like the Qs. I never thought the Qs were going to make it past there. Okay, but I'm shorting this. This is a great setup. This is the setup we were looking for a long time ago. Okay, again, we rejected off the 786. I wasn't sure if we'd make it back all the way up here, and clearly we did. FOMC drop. That's what I see in our future. Okay, let's go back to SPY, and we'll go down to the daily. Okay, this is the stuff I do every single day to look at probabilities of what's happening. Here's the top of our channel. It's been playing a role here. Got the reversal. And now reversal off of the top of that channel again. Let me extend this channel. Right extension. And we're back there again. Whether we tag it or not, I don't know. But basically, we're back testing this wedge. All right, in a simple traditional technical analysis, look at things. We just back test the wedge. That's it. I know we made a new high. So what we're going to do is, I'll make another one. You could just move that line, but here is our new point for the wedge. So we break down from here. That's another sell signal. To me, this is just a back test. We certainly will test this bottom of this wedge again. It's a matter of when. So we'll see how this gap holds here. That could be an abandoned baby. This looks like an exhaustion gap to me. You have the island gap here, and that's typically, in most cases, that'd be a very bullish situation if you're, for example, down here, after a correction. That's not a large correction. We got an island gap, and my guess is that we probably if I had to guess, and 2 o'clock is the FOMC tomorrow, we'll probably have another candle up here. I don't know if we'll fill this gap today, tomorrow, or what I'm looking for. My best guess would be Friday would be our bearish day going into Monday, and we'd likely fill that gap. So that's where all of my puts are. They start off from Monday and then beyond out until January. All right. Let's see if we have anything else we can show. So with time, we had the 11.5. We got a low there. Take that one off. We're looking for 11.11 to be our next time and price relationship. And so that brings up a good point here. So when I said up here, we rejected off to the 138 retracement from this correction. Now we're on top of it. So it held today. So is it possible to get up here? Absolutely. That would be the 592.61, and that's the 150% retracement. So again, stair stepping, and if FOMC happens to be bullish and we stair step, maybe our target is 599. Okay, so can't count it out at this point when we're just holding on to things, but I just seriously doubt it, and that's because we keep getting these new divergences, especially now that we have one on the weekly that we didn't have before on the Qs. Okay, so on the daily time frame, another lower high here. Let's see if we don't have it marked yet. So right here, yeah, I mean, does that look bullish? If we're going much, much higher and we're getting a cross, then I would say that looks very bullish and we have a lot more to go. So we have another negative divergence here, making a new high. Not even coming close to making a new high. And again, we're getting into sort of like this bear market mentality. You'll see that it's likely that in most cases the RSI will not make it very far, meaning to like the 90 and the 80 area. Typically 70 will be your highest zone. We hit the 70, we're overbought there for just a minute. Let's see what happens. It doesn't even have to make it there. There's a lot of cases where it'll only make it up to the 50. So negative divergence here, lower high. Slow stoke is still pointing up, so we'll see what happens there. If we get above resistance there and start moving up to the next point. You can probably hear the uncertainty in my mind. I think we're rejecting off of this point, but we'll see where price goes. I am fully loaded. I do not have hedges right now to the upside. I think this is exhausted. I think this move is over. So that's where my money is. That's where my money talks for me. So, if you follow and do some of the things that I do, then great. If not, most of the time we're hedging. You have to trade your own way. All right. So again, with the we're getting a potential reversal candle here. Top of the wedge. We can draw a wedge there, but we're at the top of that wedge. The bottom is a fake break. We have the island reversal. And so again, we can duplicate this and use the bottom of that for the new wedge. So after we break down from here, that will be a sell signal, again, a secondary sell signal. All right, again, new highs, new all-time highs at that. So price got back up there and is rejecting again off of there. We'll see what happens, but this is a double top and negative divergence, not only from here as a main one, but right here, just in this lower time frame, got this more of a negative divergence right there. Okay. Again, if we're getting this crossover, if this is a bullish crossover, then sure, we have tons higher to go. I'm not in that camp. I know there are some people that are. lower high here. This screams to me that FOMC is going to be very, very bearish. We probably have some other catalysts too on the economic data. Have not looked though. IWM rejecting off the 887 so far. SMH. SMH, this is another indicator to me that this is not confirming this move. Okay, SMH leads to the upside. It leads the Qs. We're not getting anything from the semiconductors. Okay, we're making lower highs at this point. You draw a triangle like that. So if, you know, price starts to break above here, so that would be, you know, possible for it to go even higher there, but we're still in a bear flag. So the Qs no longer is called a bear flag, but it's a bearish rising wedge in the Qs, which is up to the double top. So it's still a bearish formation, and we'll continue to monitor that. You have all the moving averages moving sideways. That's going to result in a big move. Is it to the upside or downside? I think the downside. Okay. And so for this one, I'll get down to the lower time frame. Let's do the VIX first, though. VIX, huge move to the downside. But where to go? Right to the 200 moving average. Okay. That's where it's held each and every one of these times. I think it's going to hold again. It's also at the 15, which is a great 1550. That's a great resistance support area. And also that old wedge that we have, holding on to that. And it's a zone, so you could draw it a little bit different. It's right on it. If we touch that point, it'll probably be at the bottom. Doesn't matter. We're holding at 200, and it's still considered an ascending triangle. We just reached the bottom of that triangle again. So I'm looking for this to have a nice move to the upside at this point. Does it have to rebuild some market structure to the upside? Absolutely. Just like we're starting over our count to the downside, we should look for an impulse wave to the downside on SPY and QQQ. And speaking of, let's go check those out real quick and get this video out. All right, so what I thought price was going to do was going to come up here and reject off of there, fill out this wedge, this expanding wedge. So clearly that was an A, B, 1, 2, 3, 4, 5 for C. Okay, that was a corrective move, and we made new highs. So at this point, we're just looking for an impulse wave down. So we don't have any market structure to the downside at this point. So there's no 1, 2, 1, 2. So I'll redo that later on when and if we get this move to the downside. Okay, so I don't have targets or anything anymore. We have nothing except a ton of negative divergences. QQQ. And again, top of the wedge there. Top of that wedge. You got a little bit of room there, or else we could take out the wicks. If we touch the top of this one, we'll be at the top there. Coming into another catalyst, FOMC. Again, there's no impulse wave. We're just filling out this bearish rising wedge. New all-time highs. Weekly, daily, monthly, negative divergence, 65-minute divergence. All of them have, so we have another divergence here. We just stretched that one out. All right, this is a big top. So I'm not really surprised that this happened. I didn't think it would, but I mean, this is a massive top. Okay, we're talking about a couple years of recession. It doesn't matter who won the presidency. Either one, they're going to inherit it, whoever would have won. again, it's not a political channel, is going to inherit a recession. So that's how we're looking at it. We look at charts. I know it's looking super bullish today, and so people are probably super excited about it, about the economy and the small caps. Clearly, this is what we talked about yesterday. We started to break out from here. I said I don't know how far this is going to go, but in order for SPY to hit the targets higher, I didn't think it was going to get all-time highs. We needed small caps to do something, and they sure did. They gapped up like 6% this morning. So everything's kind of rejecting right now. We have a hangman candle on SPY and IWM. I shorted them all, and I don't even usually short IWM or DIA, but I did it. I did it DIA today, all of them today. Okay, I'm bearish on this market. Another negative divergence on the daily time frame on the 65. DIA is going down, in my opinion. VIX. Right down to our support. We've had this support here for a long time. We didn't just add that. We're holding on to the gap. I think this is going to reverse. Look at that hammer candle. Inverse hammer. All right, we're reversing off of that so far. SMH. SMH coming into resistance. We talked about this 250 being where it should go. We gapped above this little bear flag here. So I have to redraw that. But really, what I'm thinking is that this, and we all know how that went, before 1 2 1 2, but I still think this is a 1 2 1 2 count here. We're at the 62% retracement, right in this golden zone here, the 786 62. Can it go up here? Of course. But now we have this a flat pattern for 2, a nice impulse down here, and a zigzag. All right, so this is a 1 2 1 2 setup, and we'll look for lower prices coming to a theater near you. All right, so our target, at least here, this is the only one that we can have a target for, is here. So at the top right here, assuming so far that this is the top, we have the next move here for the 1 2, and then a wave 3 should be down to 220, about 225. All right. Thanks for joining us here at Options Center. Don't forget to like the video. We will talk to you tomorrow. FOMC day.